Hello everyone, I'm John, lead analyst and founder of JP Strategic Investments, and today I'm going to walk you through our bullish thesis on Uber. First, I'll go through the fundamentals, then the financials, and finally we'll get into how we think the stock is going to perform based on our analysis. So let's dive right in. The first reason we're bullish on Uber is that we believe that ride-sharing and the food and grocery delivery business are trends that are going to grow worldwide over the next 3 to 5 years. The main factors that we think are going to continue this growth are firstly lifestyle shifts in younger generations, second TAM or total addressable market growth as a result of these younger generations replacing older generations, and then also an overall decrease in car ownership as working from home becomes more prevalent and delivery services reduce the need for personal vehicles. We think Uber is well positioned to take advantage of this growth as they are the number 1 or 2 ride-sharing and food delivery service in most major countries. The second reason that we're bullish on Uber is their diversification of services. As many of you know, Uber doesn't only offer ride-sharing. It operates a variety of other segments, including mainly Uber Eats and Uber Freight. This diversification allows Uber to thrive in a variety of conditions. Even if one segment of their business begins to struggle, the other segments can continue to grow. This was on full display when COVID-19 struck. As we all know, the ride-sharing industry took a huge hit, and it's still struggling to recover. If Uber's business model were not diversified and focused solely on rides, their revenue would have taken a much larger loss. Fortunately, their Eats business thrived on this situation, growing over 50% in gross bookings, as stay-at-home orders caused a huge uptick in food delivery. Their freight business also showed significant growth in the latest quarter, which is a trend that we believe will also continue. This diversification also allows them to funnel customers from one of their businesses to another. For example, someone who uses Uber for rides, they're more likely to use Uber Eats for food delivery rather than someone who doesn't use Uber for rides. This is a huge competitive advantage for them. They're the only company with businesses in both the ride-sharing and food delivery businesses. This allows them to leverage those industries onto each other and really make it hard for other businesses to compete. The third reason that we're bullish on Uber is their aggressive innovation. Over the past few years, Uber has been aggressively implementing new strategies and improving their services. One recent example of this is their addition of hourly rates to their rides business. Uber has now added a feature in their app so that riders can book rides based on an hourly rate as opposed to mileage from point A to point B. This allows riders to book trips with multiple stops without having to book a different ride each stop. It also allows riders who may be taking a longer trip to make multiple stops for maybe a bathroom break or to pick up food if needed. This is something that's completely new for the ride-sharing industry, and once again, Uber is at the forefront. This culture of rapid innovation and growth draws new customers and keeps Uber ahead of their competition. The fourth reason that we're bullish on Uber is their business strategy and investments. Industries like ride-sharing and food delivery have been extremely competitive from the start. This has caused many of the companies in these industries to lack in profits as they engage in price wars and battle for market share. Uber has realized this, and they know that only the top companies in each region will be able to reach profitability. For this reason, they've put together a simple but effective strategy. What they do is they evaluate each region separately. If they believe they can be number 1 or number 2 in that region, then they continue to put money and resources toward that region. If they come to the conclusion that it will be too costly to gain those top positions, then they instead choose to make a strategic investment. What they do is they approach the top player in that region and offer to exit the region, giving up their market share in exchange for an ownership stake in their company. This way, Uber can use its money and resources in more effective areas, and they take ownership in a company that will most likely be profitable in that region. We believe this is extremely smart, and it shows that Uber is thinking long-term and making sure that they are using their resources as efficiently as possible. The last fundamental of Uber's business that we're bullish on is their ability to collect and effectively use data on customer travel patterns and preferences. As the largest ride-sharing company in the world, Uber is in a unique position to see trends materializing in their industries well before their competitors. This gives them a competitive advantage and allows them to innovate their platform and services in a much more efficient manner. Alright, now that we've covered the fundamentals, let's take a look at the financials. Uber has been growing revenues at an impressive pace for the past several years. In fact, revenues have grown by almost 4 times since 2016. As Uber is a high-growth company that is currently not profitable, we place a significant amount of importance on revenue growth. Also, many have criticized Uber for constantly raising capital, which leads people to falsely believe that they are low on cash. But this isn't the case. They have strong liquidity with over $8 billion in cash and over $11 billion in equity stakes and investments. We believe that a large balance in cash and investments speaks to their ability to constantly make their business more efficient and validates their investment strategy. Another misconception about Uber is that every aspect of their business lacks profitability. While as a company, Uber is not yet profitable, their rides business in particular is profitable, and it's getting more and more profitable each quarter. Their rides business profits rose by 200% year over year in Q1 of 2020. And if that's not impressive, keep in mind that the back half of that quarter was heavily affected by COVID-19. That's very promising. Furthermore, it looks like their Eats business is on the same track for profitability. If we look at this quarter, revenues grew over 50% for their Eats business, while at the same time, their losses for this quarter were the same as their losses for last quarter. If we consider that most of their costs are variable, this shows that their Eats business is getting much more efficient, which will help them be profitable faster. Lastly, while their free cash flow doesn't show much improvement in recent quarters, we don't think this metric is as important right now due to their aggressive investment strategy. So, with all of this in mind, there's only one question that matters. Where will the stock go? Well, we believe that although COVID-19 will have some short-term negative effects on their rides business, it should exceed pre-COVID-19 bookings by mid-2021. This timeline could be accelerated as people who might normally take crowded public transportation to work may opt for an Uber instead. We also believe that during the same time period, their Eats business should achieve profitability on a quarterly basis. We believe that these factors should push the stock to roughly $45 a share by the end of 2021. Long term, we believe that if Uber is able to successfully execute on their Eats and Freights business, making them as profitable as their rides business, then we could see their share price exceed $100 per share in the next 3 to 5 years. All right, that pretty much wraps it up. We hope this analysis has been helpful to you. Don't forget to check out our website, jpstrategicinvestments.com, and also check out our YouTube channel for more analysis and trade ideas. Have a great day, everybody.